Good morning all, CamelbackTrading.org coming to you this Wednesday morning, November 4th. We're looking at the SPY ETF's market profile here on Window Trader. Looks like another gap, 3 trading days, 3 gaps in a row to the upside. We're getting to a very visual, important level, which is the weekly high, which would stop the one-time framing down in the weekly and put us firmly in balance. We still have the inside month. The daily is higher. We have tremendous volume of almost 4 million already with just under an hour to go. It is the money you keep, not what you make. Let's keep that in mind very, very early. Okay, the market makes the news, not the other way around. This market-generated information is going to be what tells you when and where to enter and exit trades. Let's remember that. I'm going to give you destinations on both sides pretty far. I'll give them to you. Please write them down so you have them going forward if we don't use all of them today. And then we'll go over the game plan and the charts. So upside destination right now, since we are basically taking out a lot of upside destinations, I'm going to start, I'm going to start with the single prints that were not filled in that double distribution day from the 26th. So 340.13, they get filled at 341.52. Second set, 341.60, get filled at 75. Then we have the all-important weekly high. That's the big thing we're looking at early this morning. 342.98, and then filling a daily gap. It's not a weekly gap, daily gap of 343.13. It's only 15 points. So if you take out this weekly high, you will fill that gap, and then you'll get put firmly, if accepted into that 5-day balance, although you will be up in the daily. Then you have 345.99 daily high and 346.88 daily high. For the downside, we had a very visual 11-wide POC, which because we're opening above it does not go away. These single prints are gone, but the 11-wide will not. It will be a downside destination. So 339.02 will be your first downside destination until we get more market-generated information. Your next destination will be yesterday's high, filling the gap at 338.25. Remember, that was a poor high. That's being taken out. Then we have 334.84 afternoon pullback low, and our overnight low of 333.74. Right now, my pre-market high is 342.90, I believe, or somewhere around that level. We're right at the top of it, so I'm sure that will be changing. This is an incredibly visual area, and look where we're stopping. Now, what's the game plan for this morning? Well, I just said it's the money you keep, not what you make. The amount of opportunities you will get today are numerous. So, do I want to be a buyer of a gap of this magnitude? I do not. Do I want to be a seller? No. However, if you open right below this weekly high, we'll see if the bears defend it one time. If they do not defend it, then the one-time framing down the weekly is done. So if you want to take a put play where your risk is only 30 or 40 cents versus some kind of inventory adjustment, you can do that. Now that's, again, we have an hour. If we open above it, that trades off the table. If we open way below it, that trades off the table. And then I just wait for most likely for A period to form. What do we do at the opening? Do we continue to battle through it? Does one side get accepted above it or below it? Those are all things. That's market-generated information, which is going to tell you when it's proper to enter a trade. This is literally throwing a dart. Do we come in $3? Do we go up another $3? The only visual level I have as of right now is that weekly high, last week's high. If we think the bears are going to defend it and it's close enough where your risk reward is good, I'll take the put play. Other than that, I will not. I will be trading Friday's expiration today. They are priced very high as it is for today's expiration. I might as well give myself another couple of days where the premium isn't going to be that much more than today's. And then, again, if you're in my room, you're going to be getting, as this market evolves and paints its picture, up-to-the-date information the entire day. We'll go to the charts. Monthly. I'm going to try to put this as simple as possible. We are in an inside month. Until we take out last month's high or low, nothing's happened. Correct? However, there's a big thing that's going to, I think, affect which way we come out. Is February's high. We closed below it last night. We're above it today. Now, it's only November 4th. A lot can happen. It's a monthly chart. But the bottom line for me is this. If we get acceptance above February's high, then we will eventually take out last month's high and go for the all-time high. If we don't get acceptance above February's high of 339.08, then eventually we'll come down and probably take out last month's low and then get sucked into a balance that was formed between February and July. Now, that's really simple terms. There's a lot more that will come into play, and it's going to take a while to figure out. But that's a key number to keep in your head. Because even though we've taken out February's high and made all-time highs since then, we've been back and forth through February's high all 4 months, including this month, and it's only 3 days old. So that's your go, no-go line. 339.08. We're above it by $3 right now pre-market, which means nothing. We know how this market can act. So it is the bigger picture, it is the monthly, but it is something you better mark down because that's going to determine, I believe, which way we come out of the inside month. Weekly, we are still down. If we take out last week's high, we're in balance. You can call it a 2-week balance. You call it a 7-week balance. If you call it a 7-week balance, then you're using last month's range, 354.02, 319.80. I'm sorry. That's not true. Last month's low is 322.60. But again, that's close enough where I would use 319.80 because if you come out of the 7-week balance, if you take out last week's low at some point, you will get that 319.80 level. So again, right now we're down. If we take out last week's high, then I'm going to put this in balance. And in the daily, right now it's firmly up. 3 gaps in a row. We came out of a 4-day balance on a gap. We're gapping higher again. Right now, we're taking out the 50-day moving average, which is around 339.50. We're above it by almost $2.50, $3. So again, that's going to be a key level. 1 day doesn't make a market. A lot can happen today. Keep that in mind. Patience and market-generated information is your guide. Good luck trading today. Have a great day, and we will recap at 4 p.m.